So thank you very much. So now we've now got a panel on sustainable investment policy and standards, which I realise perhaps isn't the headline draw that Professor Harper and our companies is. But I really want to emphasise how important we think the policy agenda is at the moment. Sustainable investing has been around now for several decades, but it's really only in the last couple of years, I think, that it's achieved sufficient momentum and interest, and has attracted the attention of regulators and standard setters. And a lot of the work that's being done at the moment is really about trying to clarify what the market is, how we define it, and how do we accelerate the deployment of capital into more sustainable markets. And I think actually it is a good thing. It's controversial. As some people think this is a bad development. I personally think broadly it's a positive thing, and we'll no doubt hear more from the panel in terms of some of the challenges around complexity and definitions, and how that's a barrier to some people investing in this area. But there's no doubt there's a lot of work is being done. Really, a kind of astonishing amount of work is being done at the moment. We heard just it was yesterday, wasn't it? Yes, that the draft. The EU is producing a number of initiatives under what they call their Sustainable Finance Action Plan. A taxonomy is produced, which is about defining what green is, which we'll hear more about in a second. They're also producing a number of other initiatives around benchmarks and disclosure requirements as well. The UK government's also been very busy setting up not just one, but two institutes, one on green finance, one on impact investing, and we'll hear a bit more about that in a second too. And then the British Standards Institute, the BSI, have also launched a number of initiatives to develop standards around what sustainable finance should mean. I'm actually a member of one of the expert committees, along with some other people here today, and there are now 3 initiatives around defining what sustainable finance means overall within the context of an investment management business, and then potentially also at the fund level. There's also stuff happening with MiFID, the European regulation, the Shareholder Rights Directive. There's an eco-label in the offing as well. The Investment Association have an initiative around labelling. So it really is a pretty sort of frantic environment at the moment. And as someone who's spent quite a lot of time, I've worked for 20 years now, 25 years in sustainability, wanting a bit more attention from the regulator, I'm now kind of wondering, be careful what you wish for, really, because there is an awful lot. There's an awful lot happening, and that's not even a complete list. So we won't try and cover it all. We'll also try and avoid using any acronyms, if that's all right. I think if we use an acronym, you'll feel perfectly entitled to shout, because I know how frustrating it is when people start using acronyms, and we have a lot that we could be using. So those are kind of some of the ground rules, and the key question that we're going to try and answer is up here on the slide. What are the key developments? What are the main developments in policy and standards that are happening within sustainable finance, and how are they going to affect UK investors? That's the kind of bit that we want to get to ultimately. What does this all mean for you as financial advisors, as investors, as wealth managers? And we may not be able to get there all the time, and that may be simply because it's just not clear yet. We genuinely don't know how it's going to evolve. But that's kind of our magnetic north. That's what we're trying to get to. So I hope that's all reasonably clear. I'm now just going to introduce our panelists, and then we'll get into the conversation. So just starting with George here. George Triggs is a policy advisor at a wonderful organisation called E3G, which is an independent climate change think tank that's focused on accelerating the global transition to a low-carbon economy. George works on the UK Green Finance Task Force and has previously worked at Transport for London and the UK's Department for International Development. Then we have Alex Doyle, who's the head of International Green Finance at the UK's Department for Business, Energy and Industrial Strategy, which I think is pronounced BEIS, isn't it? I've never really known. BEIS. She's previously worked at the British Embassy in Washington, D.C. with the Foreign and Commonwealth Office, and before that at the Department for Energy and Climate Change and the Home Office. And then, last but not least, Victoria Hasler, on the right-hand side there, is Head of Research at Square Mile, which is an independent research business that works with financial services firms Victoria is a member of the executive management team and is responsible for managing and developing the research team. And she's previously worked at Brewin Dolphin, Rothschild, and Merrill Lynch. Great. And I know that we've also got some other experts in the audience, so if there are particular areas of policy that we need to call on, then I know where they are, so I'm going to pick on them potentially as well. So I think we've got a good set of policy wonks here on the panel. George, I definitely see you as a policy wonk. Alex, I think you probably are by default a policy wonk. Victoria isn't a policy wonk.
In no way.
She's here kind of as a representative of the industry to kind of help translate some of what is happening in the policy world and how is that going to affect the industry. Great. Okay, so let's start with you, Victoria, then, if that's all right. I know that you've been spending a lot of time recently looking at the market for sustainable investment funds. And I wonder if you could tell us a little bit about some of the barriers and challenges that you've experienced in doing that job.
Yeah, absolutely. So I guess I'm here to represent the more mainstream investor, if you like, who has a growing interest in sustainability. But you're absolutely right, there are quite a lot of barriers and challenges there that we have encountered and that I suspect a lot of you have encountered at various points and a lot of other people have encountered. I think actually the main one is just confusion. There's an awful lot of confusion out there. Sustainable investing means different things to different people. There's a lot of different terms bandied around. I guess there's a kind of line as well, isn't there, that's in a slightly different place for different people, which makes it quite difficult, actually, to come up with a one-size-fits-all solution. Different people will accept different things, they expect different standards. I think that makes life difficult along the whole advice chain. So right from when somebody off the street comes in and talks to a financial advisor and I want some kind of sustainable investment, right up through the chain to asset managers who are trying to manage funds. You know, you guys have a great fund, but is it what everybody wants? Well, probably not, because that's an impossible thing to do, isn't it? So we're talking to a lot of asset managers at the moment, and they're kind of trying to think through where to pitch their fund, where should that line be for them, which is quite an interesting debate, actually. I think there's also a lot of confusion about terms. So people talk about sustainable investing, ESG investing, social impact investing, socially responsible investing, and what do these things mean to your average guy on the street? They probably find it very hard to differentiate between those terms. I mean, I think if we're honest, a lot of us in the industry find it quite difficult to differentiate between those terms. There's not a lot of standardization in the language that people use, and there's not a lot of standardization in the standards that people use, I suppose, which makes it quite difficult to look at funds and investments, and again causes a lot of confusion. And the other issue that I think I should highlight, might be shot down for this, but I think I should highlight, is that we're also seeing a lot of greenwashing going on at the moment, which again causes more confusion. So what do I mean by greenwashing? There's a lot of asset managers out there who see this increasing trend for sustainable investing and just want to jump on the bandwagon, and are kind of out there going, it's great, we've been doing this for years, it's wonderful. And please don't get me wrong, I think there are some amazing managers out there who have been doing it for years and do it brilliantly. But there are also a lot who are just trying to look like they do. So how do you differentiate between those two? Where should you put your money? Which one should you go for? I think the differences of approach don't help either. So there's a lot of funds that are labelled as ethical that do very different things. That causes confusion. And again, it doesn't necessarily mean that just because a fund is labelled ethical or ESG, it's going to meet your criteria as an investor. So I guess it's about giving investors information in a way that they can understand, that's hopefully a bit more standardised once all these initiatives come in that we'll be talking about today, and helping people to make informed decisions.
Yeah, okay. Great, thank you very much. So Alex, just turning to you, I know that the BEIS is going to be producing this green finance strategy, we hope at least at some point in the future. I know that it's obviously not been published yet, but can you give us some sense of what the government is up to, or at least your part of the government is up to in this space?
Thank you, and thank you for hosting me today as well. It's nice to talk to actual, real people in the finance world and not in a government ivory tower for once. The UK government, I think, really recognises the sort of the force and power of the financial sector on this topic, and the speed at which the City of London, but also just generally finance sector in a variety of ways, which you've started to outline, has been developing sort of products and services, but also thinking about it systemically, and through the work of the Task Force on Climate-Related Financial Disclosure, and a series of other initiatives, been really thinking about, well, what actually does, starting with climate change, but other environmental, social impact issues have for the future of the financial system. And we've been sort of keen to capture that knowledge and use that. So last year, a Green Finance Task Force, there's probably members or people whose organisations were members of that task force sitting here. But a Green Finance Task Force gave the government a list of 37 recommendations on how we develop green finance in the UK going forward. And across a range of themes. And I think we are firstly grateful for people putting their time and energy into this, but also recognise that this is rapidly developing. And so there's probably two things I need to tell you. So one is we've been working on it, and two is we're about to do a strategy, or publish a strategy that will help make sense of where the UK government sees this going. Some of the things that we have done since then are launching a 20 million clean growth fund, which particularly looks at the venture capital end of this. We have so many innovation funds and so much innovation funding. We're just making sure that we can do something to breach that gap. Is important. We've clarified some of the responsibilities for pensions funds around climate risk and it being a material risk. The British Standards Institute has done some great work trying to look at standards for sustainable finance. And we have announced the Green Finance Institute, which will be launching the 2nd of July. So some progress, and the Green Finance Strategy, which is due shortly, I can't give you a date, sorry, then I'd be bringing you into the inside, will, I think, partly it will respond to the recommendations, but I think it will also set out the government's approach to green finance going forward. So the fact that we see this as a systemic issue, that this is about greening financial systems and making sure that financial systems are healthy to respond to some of the challenges, both the transition risks and the physical risks that the Bank of England has, and actually other central banks around the world have been so eloquently talking about. The second part being that making sure that we develop the markets for green finance, and that the incentives to invest are there. And then finally, that the UK and its financial services really capture the opportunity as other markets grow worldwide. And that's sort of my team and some of the work we're doing is around being the number one partner for China as they develop their green finance market, and trying to support working together on that, but also a range of other countries, so that we can see some of those developments are happening in the UK market reflected internationally, and that making it easier for investors in emerging markets.
And can I just follow a quick question in terms of, because it's almost like we have two levels here. We have this very high level, Task Force for Climate-Related Financial Disclosure. Try not to use the acronym TCFD.
Sorry, yes.
No, you didn't use the acronym. That's fine. But you have these very high level kind of initiatives, and then you have Victoria's problem of like, well, but I just don't, there's not enough definition and structure in this part of the market. Are there things that are connecting these things? Or, I mean, are you part of that, or is that another part of government that's doing that?
So, I mean, generally, it's always a good question to ask whether government should be involved in these things. There are a number of sort of initiatives happening, and we've got people sitting on them. So the British Standards Institute work, I think, is something we've been keen to support because that brings a lot of finance sector expertise to this. The Bank of England has set up an advisory group so that some of these conversations about how do you move through this can be resolved in discussion and with the regulator the regulators. And sort of government stands ready. We obviously are involved in the EU work. We're sort of there where we need to be, but I think generally the view would be that there is a lot of work going to try and solve some of the problems, and we're there ready.
Right. Okay. Well, maybe that's a good segue for you, George. I mean, obviously, as we've just heard, there's a lot happening outside the UK and in particular in the European Union. Most notably, well, perhaps not most notably, most recently, this taxonomy that was published yesterday. Could you perhaps just talk a little bit more about what you're seeing coming from Europe and how it relates to us? And actually, given Brexit, whether, how relevant will it be? Will this still be something that we need to think about?
Sure. So I'm sure many people in the audience probably heard about Sustainable Finance Action Plan, which is this huge package of policies that have coming out, or this legislation that come out of the European Union. And one of them is this taxonomy, which is a list of sustainable economic activities, which is helping the objective is to try and associate which ones are green and which ones are sustainable, to help investors realise what is best to invest in. And so yesterday, a rather fantastic 414-page report came out, and if I told you I read it, I'd be telling a massive fib. But what did come out of it were quite a few interesting pieces, and it's had its critics, the idea of an EU taxonomy, but it's there. It's actually it's the only game in town at the moment, and it's something that, actually, as you mentioned, will the UK have to deal with it coming into the future? Probably yes, because it is the current rider internationally in terms of defining what sustainable activity is. And from E3G's point of view, the way we see it is that it actually provides a lot of clarity on what is sustainable. It's helping to avoid the greenwash that is currently existing in a lot of parts of the market. So going to Victoria's point, this should hopefully provide a bit more of an understanding of what you can invest in and what is sustainable. And the process has been sort of run by this technical expert group, which has been made of 35 different people from academia, civil society, from business, and they've all helped devise these ideas for the taxonomy. And it's not over yet. This is the final report, which is now out for review, and they'll be sort of revisiting it in July. So anybody that's really interested in this, I really recommend getting your heads into a 414-page report. I'm sure you'll find lots of good things in there. But the point behind it is that the EU is looking to, and the UK as well, with our recent legislation on net zero, and with the EU setting its target for net neutrality by 2050. This is trying to help reallocate the funds that are currently existing in brown. And so, as I said, this is the first stage, and the technical expert group will be carrying on until December. So they'll be reviewing what's in this taxonomy and the principles behind it, and why people have decided certain things are green and what's not green. And this will then this is the first phase. And the taxonomy that came out yesterday defines a lot of what are green things, but there's not a list on brown. So to meet these net zero targets, net neutrality targets, there's going to be a need to take this even further into the future. So as I said, it's not going away. What is really important for the UK, and is something more for Alex's team, is what does the UK do about it? And as you said, we're theoretically leaving the European Union 31st of October. How do we engage with that in the future, and how do we shape it? Because it's something that is going to impact the whole European markets. It's going to actually obviously have some sort of impact on the UK markets as well. So it's having that sort of that deep ingrained engagement with that process to help understand what it means.
And before we move on from the taxonomy, how do you think it'll get used? I mean, I haven't read either 414 pages, but I did have a quick look yesterday. And I wondered whether it will become a sort of way of, both from the investor side or client side, being able to say, well, this fund has 30% invested in areas that are considered to be green by the taxonomy, and therefore I can, that helps me understand or kind of locate where that fund sits. It might also be interesting for companies as well to make sure that their particular technology is listed as part of this taxonomy. So how do you think, is that how you think it's going to get used? Or?
The the Commission actually, when they released the report yesterday, or the Central Investment Group released the report, it came with guidance for investors. So there is, in fact, it's a ready-to-use piece of information that's out there. So this is why I would really recommend you take a look at it. If you are really interested in sort of sustainable investing, this is probably the first starting point, and it's the first step on the ladder. I fully appreciate your point about green and what sort of dark green and what a light green and how that sits in different portfolios. It's obviously not perfect yet. What I would say is that the process that is being put forward is just to have a platform, EU platform, which is sort of administrative body for this taxonomy, which has make it more dynamic, will enable people to, enable the sort of the process to be improved and made more effective over time, to make sure that you can decide what is actually really green and what is only sort of a portfolio that's only got sort of a few light bits in it. So I wouldn't say it's a perfect system at the moment, but it's something that is the beginning. And we're looking to invest properly over the next up to 2050 and beyond. So we need something like, I think the EU said sort of 6.7 trillion euros worth of investment between now and 2030. So this is the first step to try and encourage and move that allocation of capital towards those green areas. Moving on to the next bit. And the real importance of this taxonomy is that it's actually going to be underpinning EU eco labels. So those things that you see on your washing machines or any sort of electrics to sort of tell you whether it's an excellent piece of kit regarding environmental impact. There is a process in the moment to develop these for funds. So this will help. It's mainly designed around retail investors, so people that are looking to put their own money into investments, and help them understand what is actually really, really good and what isn't a good investment. And that is actually aimed at trying to establish what the top 20% of the market is, roughly 10 to 20%. So it's something that's created to be competitive. Again, it's something that's trying to encourage people to develop these good funds and develop excellence, but recognising at the same time that that's going to be sort of increasingly improved over time. At this point in time, some of these eco labels might not necessarily be as green as some people might establish, but it's setting that standard and ramping it up so that you get a better and better outcome.
And what's the timeline around that? Do you know when can we expect the eco label? Still some years away.
I think things are ongoing at the moment. So the development, it's sort of dependent on when the taxonomy is finished and when that's sort of established, and then sort of build on from there.
Okay.
Yeah.
And so, sorry, will that be different labels for different types of funds, or will that try and distill it all into one label?
I believe it would be.
Investments, I should say, not rather than funds necessarily.
Yeah. So it'd be, I believe, different funds. So, actually, yeah, I'm not particularly good on the detail on this exactly because I'm working quite a level of it. But it's aimed at generally just portfolios and funds. So it's quite high level. I wouldn't necessarily say it's gone into specifics just yet.
Okay.
Yeah. Anyway, that's still all to play for because the development's still underway. The taxonomy won't be delivered and in play until officially, theoretically next year. And the ambition is that taxonomy will eventually become enshrined in law. So there will be expectations that at that point, that's when the eco labels become more effective and when the final decision's been made.
Good. Thank you very much, George. And is that, so Victoria, just coming back to you, I guess, is that, I guess, judging by the question you had on eco labels, that potentially might be useful, do you think, for you or the taxonomy? Is that likely to help you navigate more through the market?
I think it's interesting and I think it's helpful. I don't think it necessarily solves the problem because, as I said before, different people are looking for different things in what they call a sustainable investment. So I think it's a really good start, and I think for a lot of people it may well be enough, which is great. It will give them some more information and help them. I guess what might be interesting is if you could have a kind of headline label and then drill down into what feeds into it so that people can focus on what really matters to them. I don't know whether that's in the plans or not, but that I think might be potentially more interesting.
Sure. So just on that, so the principles behind the taxonomy and how things are decided, whether they're sustainable or not, are all based along 4 principles, and then one on do no significant harm. So there's drilling down into it. If it's obviously not that easy to explain at a high level, but if you look into the definitions and how things are looked at, it's easier to understand why something is sustainable. But I take your point that actually it's quite black and white at the moment in terms of what is considered sustainable and what's not. Yeah. And that is one of the difficulties that is sort of going to over time. And to give you a really good example of that, what came out yesterday was that there's a recognition that there are going to be some transition technologies that are going to be required. So that includes things like the cleanest burning fossil fuel engines. So even that would count at the moment towards a sustainable investment, as long as it's the most efficient. But it's recognising that over time, moving out to some of these technologies is going to be a little bit challenging. So to get there, it's going to require a little bit more understanding and accommodation. But from a hard sustainability point of view, I might not necessarily agree with that myself.
Great. Okay. Well, we've got 10 minutes, so let's open it up to the floor for questions. We've got microphones coming. So we have a question here, Marnie. Yeah.
Hi, thank you for this. My name is Leila. I'm from Tribe Impact Capital. I just wanted to understand, why don't the policies link into the UN sustainability goals? And also, given that that's actually quite a powerful set of goals and framework where investors can do what you were trying to address, which is, it means different things for different people. And given that all the countries have signed up to this and we're all wearing the pins, and and obviously our business is, we've based our approach on the sustainability goals, and we find it to be a super powerful framework. There is never any never any linkage between policy and this. So I just wanted to understand if you can comment on this.
Does anyone have a comment on that?
Maybe I can take the government view. So it's worth noting I'm head green finance, so I've been talking about green finance particularly, but there's a lot of government work going on across government, because I think we recognise that that sort of ability to see the Sustainable Development Goals is something that isn't possible at the moment. So we've just launched something called the National it's just changed its name. We just launched a piece of work that is trying to test retail consumers' appetite for being able to link back their investments and what they're doing financially with the Sustainable Development Goals, and have been working on that with Richard Curtis's Project Everyone folk. So it's worth noting this isn't the end of the story in the Green Finance Strategy and the Impact Investing Institute. There's a lot of angles of a lot of people also trying to do that. I would make one distinction, which is that I think particularly with climate change, and I think this is now starting to be replicated, there is just a lot more data on the impact of climate change on the financial system. There has, for various reasons, that we're just much more advanced. And so TCFD is starting to give that framework for, Task Force on Climate-Related Financial Disclosure, it is starting to get that framework where we can get to the point where we have data and metrics. And I don't think anybody would say that the solution for that is entirely beautifully mainstreamed across all the financial sector. But now 70% of banks, the latest Bank of England data are saying, actually financial institutions are starting to see this as a risk, a proper risk. Only 10% have a strategic response. But this idea that actually you really can see the financial impact of some of these issues, that it's not just a sort of, it goes beyond firstly corporate social responsibility and then ESG to actually really a baseline issue, I think is the direction of travel.
I think the other thing is that the taxonomy is just focusing on environment at this point, but they have an ambition to extend it into the social area as well. So it may be, I mean, on the taxonomy, you probably, I don't think the work's been done, but you could link the 67 activities are there that you could link to the sustainable development, the environmental parts of the Sustainable Development Goals. But I think the ambition is to extend it to social as well. So maybe to come. Yes, just wait for the microphone. Sorry. Actually, if you could just say who you are as well, I always find that very helpful when I'm...
Sure. Nadia Schweimler with Astar Group. I just had a potential response to the First Lady's question, which is that the climate change agreement comes with financial commitments to the GCF, and the SDGs doesn't come with additional financial commitments by countries. And obviously, the Paris Agreement necessitates nationally determined contributions, which have financial flows that need to be made in order for the targets to be met, and the SDGs don't have the same legal targets set on countries.
Right. Okay. Yes, we have a question over on the other side. There's a microphone just over here.
Thank you. Ines Fadden from Tideway. not exactly the same market, but the International Capital Markets Association that has published green bond principles, social bond principles, and sustainable principles. Last week, they published a 3-page map of sustainable development goals to the green bond principles and the social bond principles. So it's a start.
Right. Yeah. Great. Thank you. Any other questions? So yes, one at the back and then one at the front. Sorry.
Thank you, John David at Rathbone Greenbank Investments. Is there a danger that a very robust taxonomy could inadvertently create a bubble in certain elements of the sustainable investment space as investment is focused on a smaller universe of stocks?
There is a section in the 414-page report on that. It's one of the sections I didn't read.
I think I may have flicked past it. So yeah, that's a criticism that's been levelled quite a lot at the taxonomy. But this isn't. That may well be a problem. But I think one of the key bits to counter that the taxonomy is doing is showing it's trying to encourage innovation, encourage investment in innovation. So you should be getting more money into creating new technologies, into the areas, the sustainable areas that are being discussed. So that bubble I should have thought be negated by the fact that you would have a sort of levelling out through improvement in technology innovation that comes with it.
Yeah, there are definitely problems with it. I think, in our view, there's just looking at it yesterday. Electric vehicles and some hybrid vehicles will be included in the taxonomy. But if you invest in a company that makes a widget that makes the electric vehicle work, that won't be currently included, which is a problem, I think, because you can't have the electric vehicle without all the widgets that go into it. So I think there needs to be more work done. And I think that, potentially that's an area, it's such a big part of the future as well. If the whole automotive sector shifts to EV, that's a huge part of the economy. And to not include most of that seems bizarre and potentially creates more of a risk of a bubble if you're focusing too much on particular areas. But there is a whole section on it, so you may need to have a look, John.
I'd also add to that, and that, like I said at the start, it's not a complete piece at the moment. And the next stage is to create this platform of sustainable finance, which is within the EU, to be act as an observatory, to recognise where there are problems, and to make it a dynamic process. And that dynamism is one of the key bits that's really important. And so for those issues, like Seb just pointed out, that would be something that you'd expect this dynamic institution, not usually a word you associate with the EU, but dynamic to work.
Yeah. Ted, yeah.
Actually, let's go outside the home team for someone else first, if you've got a question.
I'm fine without Mike, I think. Just a question for Alex. I'm Khalid from Responsible Investor. Given that criticism or concerns have been brought up regarding the lack of a social or governance aspect to the taxonomy, would the British government strategy include these areas?
Good question. So the green finance strategy is focused on green finance because the nature of what we set up with the Green Finance Task Force and it means that we are essentially responding to green finance. I don't think that should in any way indicate UK government a lack of interest in the other aspects. It partly, I think, the thing I said about sort of climate having the most advanced understanding of the impact on the financial system it reflects sort of the advanced nature of that. But there are so many departments working together on the other aspects that we're starting with green finance, but that is by no means the end of it.
Could I press you on those governments, on the departments, other departments kind of working in this area?
Well, I mean, you probably know them as well as I do. So, Department for International Development is doing a big piece of work on the SDGs and financing for SDGs. Department for Culture, Media and Sport are the sort of hub for impact investing and have done huge amounts of work on that over the years, including linking it sort of all the way from the finance through to some of the real world enabling measures that need to happen. Treasury are particularly interested in it as well. So.
Okay, great. I think we've got time for just two more questions. So Martin and then there's the lady at the front as well.
Thank you, Martin Baxter from IEMA, professional body.
It's a question actually for Seb, and also maybe an observation. So, the question would be, how do you envisage potentially using the taxonomy in your work? And secondly, on a very quick look, it would appear that Smurfit wouldn't fit within the taxonomy. So, do you see that as?
That's interesting. Well,
that having kind of heard the pitch, it was it was said
Yes.
that
So
sustainability runs through that organisation, and yet it doesn't fit in the taxonomy. That just seems to be absolutely barking mad.
Well, interesting. I mean, I also thought it would be a good idea to have a look and think and see whether Smurfit Kappa and TPI Composites would fit within the taxonomy, and I thought they probably would. So it may be that there's just I didn't read it carefully enough, or there is wiggle room there for companies. I mean, in our view, clearly they should. I mean, how will we use it? I mean, we have our own taxonomy already that we've developed over 12 years. And at least initially, I think will be used as a way of just kind of testing. Well, what have we thought about in this space, and what has the Commission come up with, or this expert group? So that's, I think, how we'll start. I mean, it depends really how valuable this tool, how valuable the market thinks it is. If all of you suddenly decide this is the way that you're going to assess us, then we'll certainly have to, think about integrating it more fully into the way that we approach it. I mean, our concern, frankly, is around both the lack of dynamism, and no matter how dynamic this committee is going to be, it's not going to be as dynamic as the market is. So that's one thing. It'll be too slow to adapt. And the other thing is it'll be too high level. So this point about the people who make the widgets that make your electric vehicle work, are we really expecting the Commission to be able to kind of rootle down into the value chains of these businesses and identify all these companies or all these technologies? I mean, that seems like an impossible task. So our concern is that it then decides that isn't part of that taxonomy, and that part doesn't get counted, and that obviously would affect us, and it would affect that market as well. So I think the jury is very much still out. I think it'll be helpful just as a way of testing what we do, and maybe there'll be more value beyond that. But part of the answer to that lies in whether you guys think it's useful as well. We've got a flashing clock, so just the final question here. We've got a microphone.
Thank you. Tihane Brahmput from Janus Henderson. So maybe a question for Victoria. What kind of classification of sustainable investments do you think that the wholesale market is most receptive of? And what kind of detail are they looking for when they're inquiring about such investments?
That's a really good question, and I'm not sure I've got a really good answer to it. I think there's a real balance there between, you want to keep it simple, because if you don't keep it simple, people won't understand it and they won't use it. So therefore it's of no use. But equally, you need enough detail to allow people to make informed decisions about what's important to them, because this is obviously quite an emotive issue for a lot of people, so people want to be able to get that information. What's the right place for that line to go? I mean, honestly, I don't know, and I don't think we know as an industry. And I think, Alex said something interesting earlier about how far should government go, and I think we probably need to take more responsibility for this as an industry, and in determining those standards and in determining exactly where that line should be by talking to consumers, going out there and talking to people who actually want to use the information and use the funds. And hopefully coming up with something, I mean, it's not going to be perfect for everybody, because it never can be, but something that's going to be of real use to the most people. So, I think exactly how many classifications, I honestly don't know, and I don't want to take a guess, but I think most wholesalers are very receptive to coming up with some kind of common standard and language, and I think that would be beneficial to everybody in the industry, really, wouldn't it?
Sure, thank you.
Great. Well, thank you very much to the panel, and proceed to the round of applause.